Well, we've been in an era of extremely low interest rates. In fact, 6 months back, if you got a home loan at sub 7%, which was, in general unheard of, but 6 months back, had you got that kind of a loan, sub 7% home loan, it would not have really been a surprise. And that's largely because central banks all over the world have reduced interest rates over the last 2 years. But since April, we've seen most central banks hike interest rates, including our own Indian central bank, which is the Reserve Bank of India. What has happened, of course, as a result of that is most of these sub 7% loans are floating rate loans. That is, they adjust themselves on the basis of how the RBI rate cycle changes. And now that central banks have started hiking interest rates, these home loans have started to get more and more pricier. So what's happened, right? If you got a 6.75% home loan for a 50 lakh rupee loan quantum for a 20-year tenure, just 6 to 7 months back, which would not have been a big surprise, your EMI payout would be around 38,000 rupees. Now, after this 1.9% rate hike, starting from the month of May all the way till the end of September, which is the latest rate hike of 0.5%, this EMI has gone up from that 38,000 rupee mark to almost 44,000 rupees, which is a 15.4% increase in a matter of just 6 months. So you've seen a very strong increase with regard to your EMI payouts if you are a consumer of these loans or a borrower. What has happened as a result, of course, is your total interest payout over the tenure of your home loan has gone up from 41 lakhs, which was the case when rates were at 6.75%, to now 55 lakh rupees. So your rate from 6.75 has gone up by 1.9% to 8.65%. Your EMI has moved up by 15%, and your total interest payout over the 20-year period has gone up from 41 lakhs to 55 lakhs, which is a jump of 34%, really outsized. Of course, who benefits from this? It's the banks and the financial institutions. They who have given the loan to you will obviously start getting higher returns on those slightly lower rated loans that they had sold to you upfront at the start when rates were lower. But that's the impact on your wallet, on your pocket.